He was a grand boy who laid it down in Charlotte, D.C. And now the country boys all around the world PMD. He got it knocked out, he poppin' bubbly.
So we have an IRA, traditional and Roth. IRA is the vehicle. The Roth and the traditional are the types of contributions that you're making into the account. Now, when you set them up, you have to specifically set one up. Like, I'm going to set up a traditional IRA, or I'm going to set up a Roth IRA. But it's not where you're going to take Roth money and put it inside the traditional. No, you're going to have two separate types. So you have a Roth IRA, a traditional IRA. Traditional pre-tax money, Roth after-tax money. Both say you need to be 59 and a half to pull the money out without paying the 10% early withdrawal penalty. Now, the traditional IRA, when you pull that money out, say you're 59 and a half, when you pull that money out, that's when you're going to pay the taxes. You're going to pay the taxes based on your ordinary income tax bracket. So if you're at 20%, 28%, then whatever you pull out at the end of the year when you file, you're going to have to pay 28% on whatever amount that you pull out. So depending on where your bracket is, that's the what you would have to pay taxes. It's traditionally designed so that as you get of age and you stop working, which is what we're trying to do, sit back, chill, then you won't have as much income. So you should be in a lower tax bracket. So then if you're in a lower tax bracket, you have less income, then they're saying, hey, maybe you're paying 15% tax bracket so that it's not hitting you as hard. But with the Roth, because you've already paid the taxes, you didn't deduct them when you filed each year. When you pull those funds out, you're 59 and a half, you don't have any federal taxes on those funds. Now, 50 years old, over 50, you could contribute $7,000 each year. Under 50, you can contribute $6,000 each year. Now, in order to contribute to an IRA, you have to have wages and compensation. So you can't just, if you don't have any wages, then you can't make a contribution to the IRA. But there is no age limit. So once you start working, once you start getting wages and compensation, even if you're 16, you can invest and put money inside of the IRA. Now, the IRA is just a vehicle. And you have to tell it. You have to tell it what's inside. Is it going to be stocks? Is it going to be mutual funds? Is it going to be CDs? What is inside this IRA that is going to be your investment? And whatever that investment is, it's what's going to grow tax deferred.
To the after show.